Is China in a correction or a crisis? Joining me here in the Duke Studios in Geneva to discuss is Mirko Visco from Generation Alpha. So Mirko, welcome back to the studio.
Thank you, Jessica.
So the phrase has been circulating that China is in a correction, not a crisis. So what's your opinion on this?
I agree with that. I think that the Chinese economy and the Chinese stock market are in a normalization phase. The Chinese economy has been growing much faster than the other economies. People were used to that quite a lot, and they still believe they were able to achieve the higher rate. But now it's a bigger animal. It's clearly much more difficult for the Chinese economy to grow that fast. If I look at how the Chinese stock market has been behaving, we see that despite being a big market, it remains an emerging market country with these levels of exaggerations in the up and downs. For me, it's quite similar to what happened in the past with some of the tech stocks. If we look back, for example, how the Google or the Apple or the American Online and the Yahoo stocks have been behaving, it was quite of the same. And the next chart may show us that. What we're trying to point out is that when the Chinese economy started to become large enough to attract investors, the stock market grew up quite nicely. And then there was the first crisis, and then the second recovery came when the foreign investors were able to invest in the local market. And now we're back to the level of uncertainty about the market. The same happened with Google in the past, and then we saw that once the market was again believing in the story of Google, the stock moved up, and it now is trading much higher. So I believe in the next 2 to 3 years, the Chinese stock market will certainly trade much higher.
And in regards to the Shanghai Stock Exchange, it has regained some balance as of late. So are you expecting this to continue in the short term?
That's the $1 million question. I have a crystal ball in the office, but it doesn't show me these answers, unfortunately. Now, investors were hit with the performance of the stock market, and right now they will be looking at the macro data. I think the most important is going to be the macro data. For the next months, 2 months, it will remain trading in a range of plus minus 10%. Obviously, and certainly with less volatility, because the central bank has been able to intervene properly, despite few mistakes initially, but to intervene properly, injecting some money and cutting the interest rates by 0.5%.
And China's corporate bonds were also hit by market turbulence, and they have been described as a successful market leverage. So what's your opinion on this?
The fixed income being investment grade or high yield in the Chinese market has been a safer bet, and I think will be a safer bet than the stock market, in particular in terms of volatility. Even though they are trading slightly lower, they're still been performing much better than the stock market. In fact, there is an element that is important for the fixed income market in China, is that the abundance of new issues in local currencies for the local investor. This is something quite new that foreign and local investors have been able to play. Typically in the high yield space, the real estate developers, that is probably the biggest part of the high yield space in China, have been able to issue new bonds in local currency at much lower rates than the US dollar ones. So overall, and if they are able to manage their balance sheet properly and reduce their leverage, the US dollar bonds will become very attractive investments for US dollar investors.
And Mirko, there's still a question mark looming over the markets as of yet. So what's your opinion? Are investors right in being cautious?
I think situations of high volatility will always be happening in the futures. It's the human nature to believe that stocks can go high and will still go higher and will not stop and not correct. When you have situations of artificial intervention from the central banks, injecting a lot of money, interest rates being very low, people have automatically overweight equities. If you are in front of an investor showing him a fixed income bond portfolio of generating 2% or an equity fund portfolio being able to generate 6 or 7%, the investors, they will go to the equities. So has been the natural move. People overweighting a little bit. They don't have any alternatives. Coincidentally, a lot of these situation of correction happen in August when everyone is trying to enjoy nice holidays. This happens, and I think one of the elements is the importance of the high-frequency traders. in the market. They are able to, and let's say movements are able to hit the market in a much tougher way when most of the fundamental investors are away.
Well, Mirko, thank you so much for coming in today and sharing your expertise with us.
My pleasure, Jessica.
And thank you for watching. For all the latest Dukascopy updates, do keep clicking back. Goodbye for now.